Okay, let's dive in. We are unpacking the weekly Market Navigator sources for the week of November 23rd, 2025. And the mission is, well, to make sense of this volatility storm we've seen. You have these massive corporate wins just turn into huge market losses. I mean, Walmart crushed earnings and its stock soared, but then the whole tech sector just collapsed.
And that collapse was absolutely brutal. It was one of the biggest intraday reversals we've seen all year. The VIX, the market's fear gauge, it spiked all the way to 28. That's some extreme uncertainty.
Wow.
Yeah, this wasn't just a slow leak. This was fortunes flipping fast. And this is all happening while Japan decides to unleash, what, $135 billion in stimulus?
It's a lot to process. Let's start with that moment, Thursday's great reversal. It was incredible. The Dow opens up a massive 718 points.
Huge relief, right?
Exactly. But by the closing bell, the index was down 400 points from the open. That's an 1,115-point swing in just one session.
A reversal of that magnitude. I mean, it confirms what sources like Charlie Ashley have been saying. Perfection is just no longer enough.
Right.
Investors are using these perfect earnings reports as an opportunity to take risk off the table and lock in their profits. We saw it happen with advanced micro devices, too.
But why now? I mean, for years we've seen the market let tech run on these extreme valuations. What's the fundamental shift here? What's the breaking point?
It connects right back to risk appetite versus inflation fears.
Yeah.
If there's even a little bit of uncertainty about where interest rates are headed, investors, they just stop paying a 90 times forward revenue multiple for growth. They want a discount.
So they rotate.
They rotate into tangible value.
And we saw that rotation play out perfectly in this great divergence. On one side, you've got Walmart, WMT.
Right.
The stock soared 6.5% after beating revenue, $177.77 billion, and EPS at 62 cents.
And they raise guidance again.
For the second time, they're saying their value is attracting customers from all income levels, so value is winning.
The flip side is really remarkable, though. Look at a company like Palantir. They beat estimates with, 62.6% year-over-year revenue growth.
Yeah.
That is massive.
Huge growth.
And the stock still crashed 25%. When you're trading at 90 times projected forward revenue, the market just doesn't care. It seems investors sided with Michael Burry's puts, not CEO Alex Karp's enthusiasm.
It's amazing how fast those valuations can collapse when liquidity tightens. And speaking of liquidity, we have to talk about Japan. Prime Minister Sanai Takaichi just signed off on a colossal stimulus package, $21.3 trillion.
That's about $135.4 billion. It's the largest injection they've had since the peak of COVID. And this is a really significant global liquidity event, flowing into the system, despite Japan's huge debt burden.
So what's in the package?
Well, you have the usual things like energy subsidies, but the real long-term focus is this massive investment in semiconductors and AI infrastructure.
So it's not just about their own economy.
Not at all. It positions their companies to compete directly with U.S. chip makers. It influences the entire global tech market.
Okay, so as we look toward the Thanksgiving holiday week, we're dealing with razor-thin liquidity. Markets are closed Thursday, early close on Friday.
Which means any news, good or bad, is going to have an exaggerated effect.
And the critical event to watch is Wednesday's release of the PCE data.
Yes, personal consumption expenditures. This is crucial because it's the Fed's preferred inflation gauge.
And what's the consensus?
Core PCE is expected at 3.0% year over year, which is, moving in the right direction, but it's still way above the Fed's 2% target. So this is the decision point for a December rate cut. If that number comes in hot, say 3.2%, those cut odds just collapse and we'll probably see a sell-off.
But if it's tame?
If it's tame, markets will likely rally right into the end of the year.
Okay, so technically speaking, the S&P 500 closed at 6,602. It managed to hold that weekly 20 MA support, the 20-week moving average.
That's a good sign. But the critical level to watch on the downside, especially in this thin environment, is 6,500.
So our takeaway is that volatility is the new normal. And these value plays, like Walmart with its target range of $118 to $129, are key defensive growth plays right now.
Exactly. And as you look toward the next few weeks, you should really consider the immediate impact of Japan's huge AI and semiconductor investment. Ask yourself, is the market truly rotating away from tech growth for good, or are investors just finally demanding some sanity in valuations?
This Rickley Market Navigator analysis is for educational and informational purposes only and should not be considered financial advice. Always conduct your own research before making any investment decisions. Paper trade ideas mentioned in this episode for your better learnings.